GM. Saturday, 17th of Feb, daily levels. I mean, not much to really cover today. Bitcoin closed the week pretty well. Closed the trading week. I mean, Monday to Friday, since we are now a Wall Street asset. Um, and weekends, don't expect too much to happen. I talked about these couple of paths the other day. So the black line, the horizontal line, is the December 2021 level, 2021 December liquidity level. And so we came up and hit it, and currently prices finding that as resistance. I think there's room for a shakeout to the downside. But looking at the data, it's not that bad, right? The funding rate and open interest for Bitcoin seem okay. OI has risen as the price has risen, right? So open interest is up 3 billion. Funding rate is actually around neutral, which is pretty good to see at these prices. And what I would say with BTC from here is where have we got? Yeah, I need to find the chart. I'll use this chart. So in this run up, we've seen 3 billion be added, right? 3 billion of OI added on the run up. So open interest rising is a long and a short. Remember that. It can't just rise from longs only. There has to be a long and a short. But the longs and the shorts are not equal. There's always one side that's hedged, delta neutral. Because usually on one side of most trades is a market maker. And the market maker is not directionally betting. They might be short Bitcoin because you want to go long, but then they're hedged by going long Bitcoin elsewhere, holding Bitcoin spot, getting, buying call options, whatever. They make sure that they're not exposed to directional moves. So even though open interest is rising, which means both longs and shorts, you can then apply logic to it and say, okay, anyone who added here, anyone who got long here is probably fine. But people who started to buy up here, because the open interest kept rising, these people are at more risk, the buyers. You say, why not the sellers? Why not the shorts? Because we've already gone up so much that most of the directional shorts will have been squeezed out here. It doesn't mean that we can't go higher later. But if you're looking at who's most at risk, well, you've got this little plateau here. And if we break that, the longs are at risk, right? Because then they're completely on the wrong side of the market on the low time frame. And to me, then there's three options that can happen in that area. It'd be like, first one would be just to take a sweep of that level. Second one will be down into something like this order block. And then the third one would be 48K, the round number, is that pivot level that I've talked about. So depending on what kind of dip we get, we might just get this, okay, down, straight up, and away it goes. We might get this, which is a deeper dip down into the order block area, that rough level there. Or we might see a big flush all the way down to the 48. Right? And the paths I'm drawing there are not, I'm not saying it's going to go straight down like that. And it's not going to happen today. I'm not necessarily saying that's going to happen, but you know what I'm talking about with the paths. You path 1, path 2, path 3, right? So which one do we get and how do we trade it and how do you approach it? Best thing as always is just to wait. This is a 4-hour chart. The chart takes time to develop. The candles take 4 hours to build and close. So you don't need to rush it. You can just take your time and wait. And if we get the first one, people won't want to buy when it's here, but they'll start buying when it bounces back up. And that's where the first one can actually morph into the second one, if you see it there, right? If you see the first one where it flushes out and starts to rally, if people start buying too much into that pump, it can then reverse and actually go to the second push down. So that's one of the areas to watch. And I'll be watching if we take out 51.2, how do we react? And from there, if it goes dip down order block, then it's just like a repeat of this over here, which is good, right? Pushes up, dips back down, fills in the inefficiency, pushes up, dips back down, fills in the inefficiency. If it goes further and deeper, you want to see it to be a more aggressive leverage shakeout and come right to that 48K level. Ideally, just with wicks, and then it'll probably spend a bit of time consolidating and looking bearish, right? So it might even come like this, and people will start to get bearish, thinking, Flush, weak bounce, oh, it looks like shit, and then that's when it starts to grind up, and then we break. So price action on that one will be important, but those are basically the three paths I'm looking at. And then when I look across the market, alts, as a whole, seem to be doing okay. Just pretty much the same as Bitcoin. And I said that when we took out the high here, we do something like this, where you take out the highs of the consolidation, and then you just kind of chop, 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 and it seems like it's that chopping, chopping, chopping. Maybe it'll dip back lower, or maybe it'll follow the green path. Those are the two that I'm kind of looking at. Right now, it's following the green path, which is chops, 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 and eventually grinds higher. For that one to continue, I'd say Bitcoin would have to do the green path, right? If Bitcoin just does the green path, I would say alts would avoid any deeper dip. But if it goes to the blue path or the red path, you'll see a deeper dip on alts, which will give us a chance to line up some good buy orders. That's about it, really. Weekend, quiet. So I'll see you on the live stream, 5 p.m. UTC for Ask Michael, GM. Blue belts, today submissions will be finally opening for you blue belts to get promoted to purple belt. Big day. Let's go, GM.